Good afternoon, Principal Sir. Shall we start? Hello. Hello, Principal Sir. Shall we start, sir? Shall we start, sir?
Yeah. Everybody is there.
Yes, sir. Yes, sir. They are joining.
Yeah.
Thank you, sir. Apurva, madam, you can start.
Sure, sir. A very good afternoon to one and all present here. Welcome you all to the 3-day national level webinar on IFRS and corporate reporting resources, organized by Accounting Club in association with Unnathi, Department of Commerce. Now I would like to call upon Dr. Srihari, the organizer of this webinar and convener of Accounting Club, to welcome the gathering.
Thank you, Apurva, madam. Thank you all for joining us today. We are excited to have you all here. This will be an opportunity for us to learn from each other and grow together. I'm Dr. Srihari from Department of Commerce, SSMRV College. It gives me an immense pleasure to welcome you all for the 3 days webinar on the topic IFRS and corporate reporting resources. Logic will take you from A to B. Imagination will take you everywhere. With this quote, first I would like to welcome CMA N. Raveendranath Koushik, sir, who agreed to be the resource person even in his busy schedule. I welcome you, sir.
Thank you, sir.
Thank you. Welcome, sir. A dream written down with a data becomes a goal. A goal broken down into steps become a plan. A plan backed by an action makes your dreams come true. Yes. This is our beloved principal, Dr. S. Anil Kumar, sir, Principal, SSMRV College. Sir, I welcome you, sir.
Thank you so much. Thank you, Srihari.
I hope that today inspires ideas and decisions around the way that we can make our country a better place. I welcome Dr. Nagaraj MS, Head Department of Commerce and IQAC Coordinator, and other department heads and my colleagues. I would like to welcome all the participants to this knowledge gaining webinar. Welcome you all. Thank you.
Thank you, Srihari, sir. Now I would like to call upon Mrs. Vijayalakshmi, Assistant Professor, Department of Commerce, to introduce our beloved principal.
Thank you, Apurva ma'am. Hope my voice is audible.
Yes,
A
ma'am.
warm good afternoon to one and all. So it's my honor and privilege to introduce Dr. S. Anil Kumar sir, Principal, SSMRV College. I, Vijayalakshmi R. from Department of Commerce, so warmly welcome you again to the program, sir. He is a man of distinct vision, fountain of illuminating ideas. He is a leader, a visionary, an acclaimed academician, an able administrator. Dr. S. Anil Kumar is a visionary leader who works passionately to revamp education system and has developed a unique model called 360-degree education for the wholeness model, with a 6-dimensional approach that caters to the holistic development of an individual. He has been a popular teacher among faculty and students and has spearheaded many innovations in the field of education. He has an academic experience of over 40 years in the field of commerce and management, both at UG and PG level. In recognition of his contribution to the field of commerce and management, he has been awarded honorary D.Litt from the University of Panama, US. He has more than 21 years of research experience for many universities for MPhil and PhD. He has produced 5 PhDs and 31 MPhil students. He is a renowned author and has written 25 books in various subjects of commerce. He has been doing various UGC-sponsored projects. Dr. S. Anil Kumar has also published many research articles in many reputed journals. He has presented papers in national and international conferences. To mention a few, Griffith University in Australia, Harvard University in Boston, USA, and so on. He has been an elected Academic Council member of Bangalore University, member of Tourism Committee of FKCCI. He has been a chairman of Board of Studies and Board of Examination of Bangalore University and other universities. He is the member of NACPEER team. The reflection of his hard work and commitment has transformed into various awards, such as in recognition of dedicated service as a teacher conferred by His Excellency Dr. Hansraj Bharadwaj, the then Governor of Karnataka, organized by Rotary Bangalore South and Karnataka Civil Defence Corps. Dr. Abdul Kalam Gold Medal for his contribution to education and research, awarded by Global Economic Progress and Research Association, New Delhi. He has been awarded for achieving excellence in education from Rashtriya Shikshana Samiti Trust. Dr. Kumar has also received Best Faculty Award for the year 2020-2021 from Vivekananda College, Tiruchenegunda, Tamil Nadu. He received Lifetime Achievement Award for Novel Research Academy, Puducherry. He has been an NCC under officer and has won the Best Cadet Award. He has also received the Guru Vishishta Award 2022 by Dayanand Sagar Business School. He has also facilitated for his work by MS Ramaya Foundation, the occasion of Teachers' Day. Coming back to his key focus areas within SSMRV, his academic innovations lie the 360-degree education for the wholeness model with 6-dimensional approach, setting up of 40 academic and co-curriculum clubs for holistic development of the students, introduction of skill-integrated learning program with emerging technologies, introduction of work-integrated learning program, establishment of corporate labs, innovative teaching learning pedagogies, international collaborations, establishment of simulation labs for skill enhancement. The direct impact of the same was our college getting an A grade by NAC for the first time during its third accreditation cycle. We are proud to mention that our students got many ranks and gold medals in Bangalore University examinations. SSMRV College has been ranked 4th among top 5 colleges in India for best value for money in India Today MRDA survey 2018, 19, 20 and 21. Sir, you are an inspiration to the students and all the teachers. Thank you for everything. Now I call upon our beloved principal, Dr. S. Anil Kumar sir, to express his views towards the program. Thank you, sir. Over to you.
Thank you, Professor Vijayalakshmi. Good afternoon. First of all, I would like to welcome the resource person of today's program, CMA Raveendranath Koushik. Welcome you, sir. Yes. Okay. I think this is the second time we are having an interaction with Raveendranath Koushik sir. And this is a very unique initiative from the Department of Commerce through Unnathi. Unnathi is actually meant for faculty and student development. It's an initiative for student and faculty development in association with Accounting Club. We have academic clubs in our institution, like Accounting Club, Taxation Club, Marketing, HR Club, etc. So this is a unique initiative from the Accounting Club. And today, we have topic on IFRS and corporate reporting resources. It's very, very to faculty and students. So I really appreciate the initiative taken by the Department of Commerce, the coordinators of both the clubs, Professor Anusha, Hari, and HOD of Department of Commerce, Dr. MS Nagaraj, and all the members of the club for organizing this particular program. And it goes for 3 days. So it is a national webinar. And we have been organizing such programs a long time and hope this will be useful for all the students and the faculty members in India and abroad. Thank you so much.
Thank you so much for your encouraging words, sir. Now I request Mrs. Vidya, Assistant Professor, Department of Commerce, to introduce the resource person of the day.
Thank you, Apurva ma'am. Hope I'm audible.
Yes, ma'am, you're audible.
Yeah, thank you. So I take this opportunity to introduce our resource person for the day, CMA Raveendranath Koushik, who is a consultant to startups by helping them in mentoring and fundraising. Sir has 11 years of industry experience and 12 years of professional consulting experience. He is a fellow member of Institute of Cost Accounts of India. Sir holds a bachelor degree in law from Karnataka State Law University and postgraduate degrees in finance, taxation, and economics. He has worked as independent consultant since 12 years in the area of direct taxes, GST, internal audit, and project management and consulting. He is involved in preparation of detailed project report for new and expansion business, financial reports and incorporations of Section 8 companies as part of MSME initiative. He has addressed in more than 50 programs on the topic how to prepare bankable project reports in various industrial association bodies. Sir has 11 years of industrial experience, worked in various companies under different roles and responsibilities in finance and accounts domain. Sir is a secretary of LUB Karnataka for the year 2021 to 2023. He was the chairman in the year 2018-19 of the Bangalore chapter of Institute of Cost Accountants of India. Sir is also a subject matter expert for the National Productivity Council, Government of India, resource person for Higher Education Academy, Government of Karnataka, Fiscal Policy Institute, Government of Karnataka, National Dairy Development Board, Government of India, and many more. He has delivered keynote address in various national, state, and UGC-sponsored conferences, workshops, and seminars. He has published articles in national and international journals. Sir has delivered more than 200 talks on various topics in many institutions across India. He has conducted more than 60 online FDPs and more than 60 financial literacy programs. Sir is also a recipient of Sadak Lifetime Achievement Award 2018-19. Sir, it is an honor to have you as a resource person for today's program. I welcome you once again, sir. Over to you, Apurva ma'am.
Thank you, madam. Thank you.
Thank you, ma'am. So before starting off the session, I've got a few instructions. All of you are requested to fill the feedback form that is being sent at the end of the session in the chat box. So kindly fill it on all the 3 days. Only then you'll be awarded with the certificate. And if at all you all have any doubts or questions, you can ask at the end of the session. Over to you, sir.
Okay, thank you, and good afternoon to all. Ellargu namaskara. So, Dr. S. Anil Kumar, who is the man behind all this initiative, So I would like to thank him for inviting me for this program. And of course, Dr. Srihari, who is with me for quite a long time in various forums. So I would like to thank him also for giving me an opportunity to address the students and also the faculties from the institute and also from other part of the world or nations.
ನಾನು ನೋಡ್ತಾ ಇಲ್ವಾ ಇವತ್ತು
Hello. Yeah. So this is a great opportunity that a wonderful topic has been chosen for the next 3 days to deliberate upon. A very important topic. Why I'm telling, because it is going for tremendous change in the recent years. We can expect a lot of changes in this corporate reporting in the coming days because the globe is changing towards a lot of new initiatives like environmental audit, climate audits, and even the energy audits and all those things. So given these opportunities which are coming in the new way in the new years to come in the global arena, this particular concept is one thing which goes for a lot of changes. There is already a lot of changes which is there in the queue. Only thing is that it is pending for the approval from the MCA, Ministry of Corporate Affairs. So once it is done, I think we need to go for some of the revisions on the existing standards. So it's a dynamic subject which keeps on updating every now and then. So it becomes very important that we need to give more attention to this. Even though this concept doesn't hold good for people who are in the education line, especially who are studying in colleges, because this is more to do with something like reporting structures, which needs to be done by a professional at the time of doing the audit and going for a lot of consulting related activities. But definitely there is huge scope which is there for all the graduates and postgraduates, and that's why the relevance and importance of this topic is being finding place in the syllabus of the commerce students. So having said so, the 3 days I would like to split it in the form like the first day, that is today, I'll be just briefing you up about some of the introduction concepts which are there in this IFRS and the financial statement reporting structures. The second day I'll be taking some examples of some of the important standards which are more relevant and apt for you students and also for some of the faculties who are there in today's meeting. So tomorrow I'll be covering upon some of the important standards with some examples and all those things. And the last day I'll be focusing more on the how this particular standards is going for revamping. That is, what are the changes which will be taking and what are the new things which will be getting added up in this particular subject. So my last day will be focused only on the emerging trends in this concept, which you don't still find a place in your syllabus as of today. So I'll be deliberating more on those things, including NAFRA's role of NAFRA and all those things. So this is how I have planned the topics for next 3 days. So let me share the small presentation what I have for you for the today's session. That is basically giving the overview of the standards and the how these things came up and all these things. So let me take you through this. Even though you people are familiar already with this, still I would like to just go to that and share some of the things. 1 second, I'll just share you. Are the slides visible?
No, sir.
It's not visible. It's not visible, huh? I can see the slide.
Yes, sir. It's visible now.
Yes, sir. Now it is visible, sir.
Visible, right? Okay, good.
Yes, sir.
So this is what I wanted to just talk about, the general things which are there behind this accounting standards, because when we want to know what is the implication or the importance of these standards and why it is required, we need to have this uniformity approach when we are talking about global. I think most of you agree with me. The concept of accounting has gone for tremendous change. We are now seeing something called as robotic accounting. We are seeing AI accounting, digital accounting, and many more concepts have changed, undergone a lot of changes in the international arena. And big companies like IBM, GE, and all those things, they're already moved into AI accounting, that is artificial intelligence accounting, where most of the things will be done in the computer way. So that requires a lot of technology, innovation, and related things which are getting into accounting system. So the traditional system of bookkeeping, I think, is slowly getting merged with the innovative technology-based accounting. So keeping those things in mind, even the framers of these accounting bodies are also facing a lot of challenges when it comes to the question of addressing how to go ahead forward in order to see that the general principles of accountings are not sacrificed in the environment of a technology-based accounting. So that's the base actually. The accounting principles are the base. We should not leave these principles, and we cannot just go beyond that and start doing something which the universally acceptances are not there. So technology is one front which is supporting the accounting, but at the end of the day, technology should not over take the procedures and the principles and practices which are there through which the accounting system has emerged over a period of time. So that is one thing which needs to be looked into. So that's the key things which I will be deliberating on the last day of this webinar, where I will be focusing more on the what are the forthcoming challenges which are there in the reporting structures or in the framework of reporting when it comes to the question of you doing it audit in a technology environment. So how the statements or how the financial reporting structures will undergo for a change when we consider the technology interference in these accounting concepts. So accounting principle means those rules of or conduct or procedures which are adopted by accountants universally. That's a very important word. So when I'm talking about accounting principles, that needs to have universal applicability. It's not geographical based reporting what we are talking about or the principles what we are talking about. Once we are releasing some principles in accounting, it needs to be adopted universally. So whether your operations are there outside India or not, or whether you have some relationship with the related parties in foreign countries or not, but you need to ensure that you maintain the universality when you are recording the transaction, measuring the transaction, and accounting the transactions, or whenever you are doing the transaction. That's a basic concept what they are talking about. So then to ensure uniformity and clarity and understanding while recording the transaction, these are the very important ground rules, I think, which you people have already studied in your first PUC of your accounting class. That accounting principles holds a very strong base. So if you are not understood this accounting principle in the base level that is in your first PUC textbook, right, then advancement in accounting studies will not help you out. It will not be handy for you. So coming back to the concepts, again, these are the basic things which they have taught you already. I will not spare a lot of time on this because most of you are already familiar with this concept. But you cannot study IFRS or Ind AS or any standards for that matter without knowing the base, that is, without knowing the concepts. So these are some of the concepts which are very universally accepted concept, business entity concept, dual aspect concept, cost concept, and going concern. This is a very important concept. Going concern concept is a very important concept which is required in order to maintain the stability in your accounting practices, whatever you do. So whenever you want to make provisions or whenever you need to do some reserves for contingencies and all those things, you need to ensure that you need to think that your business is a going concern. So it's not a purpose that business exists for some time and it gets closed after that time. So that concept needs to be removed from the mind. If you are operating in the environment of following the accounting concepts, then it becomes very important that you need to adhere to the very important concept of going concern. That is, company's entity is go wrong. Okay, it keeps on going over period to period, and it doesn't have any impact if a board of director resigns or if the promoter resigns from the company or something like that. So it's an entity which has perpetual existence for a period of time. So that's how going concerns are measured. Then comes accounting period concept. Of course, you know that there is a period, even though this period may differ from country to country. Some country follows their accounting period starts from the day of their incorporations. Sometimes it starts from June to ends in May, and some companies start from calendar year Jan to December, and some countries follow April to March. So like this, there are a lot of accounting period, but the period needs to be defined. And the reporting, when you are doing it globally, you need to follow that particular convergence, which is more apt to that particular country. So that's one of the things what has been told in the accounting period definition. Even though you are working in different country zones or different geographical environment where they follow their own individual accounting periods, but when it comes to the consolidation and reporting at the head office level, it needs to be done as per the policies which have been guided under their own country norms. So that needs to be adhered to and followed. And because a lot of things depend upon that accounting period. So then realization concept, rupee value concept. So in India we call it as rupee, but other countries follow the dollar value concepts and all those things depending upon which country we are implementing this. So everything needs to be accounted in rupee. That's it. Rupee is the base of exchange. Anything you do it in India, it should be done through rupee, or it needs to be drilled down to rupee. Then exchange rates needs to be adjusted accordingly. So there is a standard again for those things also. So we need to follow those procedural things which has been laid out under the standards, and that needs to be practiced. Then consistency, very important thing. So that is one of the key factors we can say when we define an accounting concept, because the reporting or the way you need the account, you do the accounting, right? There should be some consistency which you need to follow. You cannot just shift from one depreciation method to another depreciation method, or the provisions, how you do the provisions. You cannot just change whenever you want and as and when you like it or something like that. So you need to maintain some consistency, because a lot of people will be looking at a lot of stakeholders are looking at your reports, and you should not be confused at the end of the day. So why these things are, when he starts comparing with period to period basis, right? So it should not give him a long logical input just because I have changed my way of approaching with the different ways of recording the transactions according to my ease or comfort level, whatever it is. So their consistency should not be at the cost of the causing some challenges to the people who rely on it, or it can be a statutory body also. You cannot just take exceptions for whatever you are reporting with a statutory body. So this cannot be done unless and until you follow the norms and procedures which has been laid down. Okay, so there is definitely challenges in this consistency era, because we are going in for a lot of changes, and these changes are now based not only on the individual corporate level, it is through the cross-border transactions what are taking place, and the level of cross-border transactions which are taking place, and the impact which it is creating on the economy as such. So accounting should be viewed in a broader perspective today. It's not only that accounting is required only for looking at how your business performs. It's even talked about from the social corporate responsibilities also today. So even that is also playing a vital role. I don't know how many of you saw yesterday's report from the World Economic Forum, which talked about willful reportings. So willful loss, how it should be borne and how it should be taxed, willful tax, how it should be raised on the company, because there are other ingredients also which the bodies are now looking at in the organization. It's not purely your profit or loss, it is impact which is creating when making the profit. So what are the social impacts, or what are the environmental challenges which that particular company is creating in the global arena, and all those things. So those things also needs to be looked into now. So accounting concept, the base is yes clear, but the way you are looking at the base has changed now. So So whatever we read these concepts when we were graduates, right? That is not the concept how we need to interpret today. So it has a wide variety of interpretations which has gone. There are wide various of changes which has taken place. How you look at each of these concepts. That's just because of the changes which are taking place in the business environment, in the global environment, especially in terms of the trade negotiations, what is happening, and the entire business environment under which we are operating, maybe because of technology, or maybe because of integration, or maybe because of geopolitical changes which has taken place in the world and all those things. So this concept definitely has gone for a change. So when I was reading some of the concepts a few days back, I definitely thought that these are the things which we did not study when we were doing our professional course, or when we were doing our commerce or master course and all those things, because these concepts were not there at that point of time. And as I told you at the inaugural address itself, that it's a dynamic concept and it's going for change over a period of time. So whatever you study in your first sem may go for a change in your second sem if the same subjects are studied. So that is the speed at which the changes are happening. But the concepts as such, whatever the terms we are using, it remains same. But the implication of the terms, or how the terms are getting used or interconnected in the business world, is going for a change. So it's very important for the graduates and postgraduates, and also for professionals who are dealing with this type of topics, right? So they need to also get updated with these changes. So we need to look from the local perspective and move towards global perspective in terms of how these concepts have gone for a change. So fundamental accounting assumptions, I told you going concern is a very important assumption. Second one is consistency, and third one is accrual. So these are the three basic assumptions what you do in fundamental accounting, and these have still important relevance in today's accounting standards. So whenever the standards have been framed, and whenever the standards framework needs to be worked out, right? So they consider these three as the main fundamental assumptions whenever they want to come out with the new standards or bring changes into the new standard. We need to ensure that these aspects have been taken care of, and there should not be any infringements or any overriding of any of these changes which you are proposed to bring in these standards. So you're keeping in mind that these things should continuously flow. So accrual concept, consistency, and going concern. These are the three very important fundamental assumptions which will be made in all the framework of standards. So in India, accounting standards, the main body which is looking after that. Hello?
Sir, sorry to disturb you. Sir, slides are not moving, sir.
Still it's in the first slide, huh?
Yes, yes.
But it's moving here.
We are not able to see the changes.
You're not able to see the changes. Again, 1 second, I'll share it again. I'll share it again, 1 second.
Okay, sir.
What about now? You are able to see? Hello?
Yes, sir.
Yes, sir.
Yes, sir.
So is the screen changing now?
Yes, sir.
Yes, sir.
Okay, when I go to slideshow, I think it is not moving, right? Okay, I'll do it like this only. I'll not get into the slide side mode. Okay. Okay, so coming back to the accounting standard in India, right? So the Institute of Chartered Accountants of India is the premier body in consultation with a lot of financial boards and the Ministry of Corporate Affairs. They have been given the responsibility to develop the new standards and to come up with new standards whenever it is required. So they are the people who are working on the standards in alignment with the global standards. So one important thing which is very worth mentioning at this point of time is that when we designed our accounting standards, right? I'm not talking about Ind AS, I'm talking about the accounting standard which was applicable prior to Ind AS came into picture. So we had developed such a wonderful accounting standards that most of the provisions in the IFRS were apt and applicable even in accounting standard. That means we had some of the provisions which were there in IFRS or with the IFRS board came into, right? The committee board, came up with IFRS standards. So most of the provisions which were mentioned in that IFRS was already practiced in India in accounting standards. So that was the beauty of the accounting standards, what the Institute of Chartered Accountant of India had released at that point of time. So it did not become very challenging for India to migrate to Ind AS when it was told that everyone needs to go for the common global IFRS standards. So it was not so difficult for India to just move towards IFRS, that is Ind AS of IFRS version of India is Ind AS. So we were very easy. It became very easy for us to move the companies because they were already practicing this accounting standard and they were following the accounting standards for the regular recording of the transaction and measuring the concepts and all those things. So it became very easy for transforming from the existing AS to Ind AS. So that's why India took a very short span of time to convert itself from its AS to Ind AS. So the reason behind is that most of the standards what India had already come out with accounting standards, right? So most of the standards were already in alignment with IFRS, what it was told by IFSC, that is International Financial IFRS Committee, we can call it. So that's how it was done. So while formulating accounting standard, the accounting standard boards takes into consideration the applicability of law. This is very important. Customs, usages, and business environment prevailing in the country. So this is a very important thing. There are a lot of things which are there in GST. There are a lot of things which are there in customs. There are a lot of things which are there in direct taxes. There are a lot of things in SEBI guidelines which needs to be considered. See, when you are framing any standards, right, you need to see that the local acts, whatever is there relating to business or where the compliances need to be adhered to by the corporates with the local regulations and all those things, right? So even that also needs to be considered at the time of framing any of your standards. So it's a very tough job actually to define a standard because there should not be any contradictory or a conflicting thing which happens when you release a standard and if it is not meeting the purpose or obligations, whatever it was told in the act or whatever it is. So you cannot just copy some standards from whatever is there prevailing the world and try to adopt in India. It cannot happen because there are a lot of domestic rules and regulations which are in practice, and even that also needs to be considered. So it's the way that we need to look it from the internal aspect and move towards the global aspect, not from global aspect and change our internal aspects. It's not like that. So this is a very challenging thing. That's why any one standard, if it needs to be rolled out, right, it takes a lot of deliberations, a lot of time, a lot of discussions, a lot of meetings should happen with various regulators where that act will have an implications and all those things. So defining the standards, coming out with rules and regulations, coming out with the concepts in standards, and all those things revolves around a lot of things which needs to be first driven in order to make it more effective and efficient. So the ASB also gives due consideration to international financial reporting standard. Of course, that's something which you need to do in this global competitive era because there are a lot of companies, Indian companies, which are having branches in foreign countries. There are a lot of foreign countries which are having branches in Indian companies. There are a lot of joint venture type of businesses which are running between these two countries. So tomorrow there will be merger or acquisition or takeover between the cross-border transactions will be there. A lot of cross-border transactions are happening today. So whenever you are defining your standards locally, right, it should also consider some of the important points, whatever is there from the IFRS, that is the International Financial Reporting Standards also. So that's the role of the Institute of Chartered Accountant India, which came out with a very good standards very easy and very aptly we could move into the IFRS regime very fast. So even we know that how long it took time for the developed countries like China and US to adopt those standards and all those things. So coming back to the characteristics of financial statements, which are the core thing of our deliberation for the next 3 days. One is understandability, relevance, materiality factor should be there, reliability should be there. So that's a very important thing which the investors will be keeping on watch on your financial statement. It should faithful representation should be there. Neutrality should be there. That means there should not be any bias in your reporting, or you should not hide the facts or something like that. And prudence, of course, it's a very important thing which needs to be there in the financial statement. Completeness and comparability. So comparability is one thing which most of the investors or the banks and all these people will be looking at. So, and also the top level management in the organization. So they will also be very keen to look into those figures of the progress or development or the growth of the organization over a period of time. So I will not get into too much of all these things because most of the concepts you are already aware of. I'm just trying to run through these slides because these are all general concepts which are there. So I think since most of the students are already there in this particular group will be from commerce background, they might have come across all these things in their basic classes when they were taught about accounting and all those things. So I'm taking those things as exceptions, and I'm just continuing with those, skipping all those things and not explaining each and every aspects there. So accounting standard needs to have, these are the very important, 5 important things which any accounting standards across the globe should have. One is uniformity. That means there should be uniformity in the defining of the standards and also in the way they are presented and all those things. So there should not be any too much of materialistic difference between the two standards when it compares to two different regions. So there should be at least some uniformity level which needs to be understood or which needs to be imbibed in the standards. That is what they have talked about there. Rationalization, of course, whatever you are disclosing or whatever you are bringing it in your standard slide, it should be something which is readable and acceptable across the globe. So that is rationalism should be there. And comparability, of course, you need to, because when there are two setups located in two different, the comparability between the performance of two different locations of the same head office, right? They need to be in a comparable mode. So whenever you are recording the transaction or measuring any transaction, right, that measurement needs to be adopted and acceptable between the two different regions. That's called as comparability. So if you don't have comparability within the period, that is within the country, between the two periods, or between two different countries, between two different transactions, then then it's again we are not adherent to the concepts of accounting. That's what it means. So comparability, whether within the organization over the period of time you are comparing, or between the organization if you are comparing between the two financial statements, there should be some common grounds on which it should be compared. So those things needs to be there in your standards. That's what it means here. Then transparency, of course, this is a very important thing in today's competitive world. And even though there are a lot of secrecy things wherein which doesn't get disclosed, but there are a lot of disclosing standards, because I think most of you agree with me, because financial reporting is more of transparent, because the reports gets published, your balance sheet gets published, your profit and loss, your notes to accounts, your schedules, everything is on the public platform. It will be there on your public system. So anyone who wants can go there, see there and all those things. So that is the transparency they are talking about. So transparency in the form of how do you report the transaction, transparency in the form of how best information you are sharing with the customers or with the stakeholders and all those things. So more and more thing is that there should not be any scope for concealment of some things, information or some important informations without coming to the knowledge of any of the stakeholders. So that should not happen. So that's a fraud which you are committing, and that's not the level of ethical way of running your business.
Is it okay if I exit?
Yeah. Then adaptability in financial statements. So any information which is plugged into the standards, right, through the standards, it needs to be adaptable in the financial statement. That means at least it needs to come as a notes to account. So if it is not if it is not finding any place in the actual P&L account or cash flow statement or balance sheet, it should come as a notes to account. You need to give the disclosure for the same. So disclosure, measurement and disclosure are two important things which are there in accounting standards. So this is a part of your disclosing standards. So if anything is not appearing in your financial statement, any information which is very vital to the company, if it is not getting quantified in terms of money, but which has a very important importance in terms of sharing that information to the stakeholders, that should form part of your notes to account. So that can be in the form of showing it in the form of calculations, if anything is required, or to show it as a contingencies or provisions or whatever it is. So adaptability in financial statement is something which is a very key thing, which is driving your accounting standards. So these are the 5 important things which needs to be imbibed in your accounting standards when you say that you are following some accounting standards as such. So having said so, Ind AS, this is one of the new version of accounting standards which started, where we moved from the traditional accounting standards to the IFRS converged standards called as Ind AS. Okay. So, Indians assurance to coverage with IFRS, the Ministry of Corporate Affairs issued a press release on 25th February 2011, notifying the Ind AS, and several of the requirements of Ind AS are considerably very important, which needs to be understood. So, this is how the IA International Accounting Standard Board works. So, this is one the flow chart of how the standards get drilled down. Okay, that's very important. Because we cannot get isolated with our Ind AS without mapping to the international standards. So this is how they have designed it. So this is how the working of IASB, that is International Accounting Standard Board, works. So you can see that there is something called as International Accounting Standard Foundation, which is heading all these aspects of standards. So they have been assisted by IFRS, that is International Financial Reconstruction and Committees, that is the internal committee which is there, which will be giving the interpretation. So their job is to give interpretations to the standards which have been referred to IASB. And also there is standard assessment committees which are there, which do a lot of assessment, and also they give their advices to IASB, International Accounting Standard Board. So IASB is the body which creates the IFRS, which is enforceable under global. So the job of IASB is assisted by 2 important bodies, IFRIC. One is, that is Interpreting Committee, International Financial Reporting Interpreting Committee, and of course SAC is there, that is Standard Assessment Committees are there. So they are the 2 bodies which has representation from professionals all over the world. So these bodies assist them, one in form of advisors, other form in interpretation. So these are the 2 things which assist IASB, and IASB the final body which creates IFRS. So this is how the flow of how the international financial reporting standards work in the world. And coming back to the IFRS standards and integrating adopted by the International Accounting Standard Board, they comprises of following 5 important bodies. One is International Financial Reporting Standards. That's the standards what normally comes out after getting verified and advised by the various committees which have been set up at the global level. So that's the International Financial Reporting Standards. Second one is International Accounting Standards, which is a very important standard which only looks into accounting aspects. Okay, so they don't look into the reporting part; they look into the accounting part. That is how the transaction get recorded. What are the bases under which you need to record out? How to recognize the revenue? So how to treat a particular item of transactions. So we have seen a lot of transactions which are taking place. For example, the carbon accounting is there today. So carbon credits needs to be accounted. So how do you do that carbon credits accounting? Again, the standard fixes, okay, this is how you need to value it. This is the formula you need to use in order to treat your credits, and if you are redeeming the credits, how to account for the credit in terms of revenue and all those things. So these are the things which the Indian accounting standards talk about. So they don't focus more on reporting; they focus only on accounting aspects, the transaction, how they view the transaction, how they pass the transaction in terms of measurement, that is in terms of fixing the value for it and recognizing those in the books of accounts. So that is done by international accounting standards. And interpretation development by the international financial and reporting interpretations committees and forward standing interpretation committees, SICs. So these are all committees which will be assisting the International Financial Reporting Standard Board Committee, that is basically which it comes under International Accounting Standard Board. So this again will have representations of professionals from pulled out from various countries. So those people will be giving their representations, and whenever any new standards, convergence standards needs to be brought internationally, right? So these people will be given an opportunity to make their representations there. So accordingly, after the detailed deliberations which takes place in that forum, so finally they come up with the accepted standards which will be rolled out globally. So it's a lengthy process. It's a lengthy process which is spread across the globe, and they are doing a very wonderful job maintaining it in alignment with a lot of bodies like South Asian Federation of Accountants, that is SAFA and all those things. CAFA is there, SAFA is there. So a lot of even the geographical way organization accounting standards boards are there. So even they also culminate together, and they give their views, suggestions before the IFRS are released. So it goes through a lot of deliberation. So that we need to understand. So in that process, there are a lot of changes which takes place, which can benefit few countries or which can harm that few countries also. So we cannot do the justification for all the countries at the same point of time. There will be some countries which will be losing. It may be a permanent loss or it may be a temporary loss until they try to adopt those standards and make their books available at the global standard level. So there are a lot of challenges here, but they keep in mind even the developing concept and also the developed nations. So they don't want to see that developed nations start putting pressure on the developing countries or undeveloped countries in forming that. So there are a lot of procedural things which happens. Okay, they take into consideration all these things. So just like how they form trade treaties and all those things. At the same time, even the accounting standards also goes for a lot of transformations. Okay. Then why IFRS? This is a very important question. Why we need to go for IFRS? So what is the purpose of going for IFRS? Or what is the use of IFRS and all those things? So one is it enhances compatibility and different sectors like countries and companies, which will lead to more transparent financial reporting. That's a very important key word which we need to remember, because when we are transparent, that means people can rely on us, whatever the standards we have followed, right? People can rely, investors can rely, because you see a lot of company shares are getting listed in a lot of countries. So how do I trust your balance sheet? How do I trust your fundamentals, that is your financials? How do you trust? So if I want to trust, then I need to ensure that you are following the IFRS standards, which are comparatively, which can be compared across different states. Today we have something called as XBRL, Extended Business Reporting Language. So that's the tool which is now getting universally accepted, which throws the universal form of reporting structures, which gives various interpretation, various data or various statistics which you can pull it out and start comparing and start trusting that figures. So that can be done only if I can visualize that, okay, this is how this needs to be interpreted. So I cannot go to each and every country and start interpreting their own rules in their own way. That's not the way the investors are looking today. Investors want something, information which are compatible globally and which are across the sectors, can be made easily. And of course the countries, okay, which are wherever I'm doing the transaction, I need to see that that country follows the same procedures in the general aspects of reporting what my country does. So that's the one of the thing where IFRS tries to unite or bring together, or it culminates all these various factors which are impacting the different countries, and they try to bring it together. That's a very important role what the IFRS plays. The second one is the use of IFRS is like to enhance the reliability and image of the financial reporting by Indian industry across the world, since it will be based on global set of accounting standards. So that's where a tag of developing, underdeveloped or less developed countries, tag can be compromised, and we can see it as that we are working towards one common standards which can be practiced across globe. So this can help more and more investments to come in, more and more type of businesses coming into your area and all those things. So when you see that you are open, your standards are open for change, and you are ready to accept the international standards, then definitely businesses will be interested to come and start working with you closely. So that's one thing which IFRS will try to ensure that it's reliable and the image of the financial reporting of that particular country across the world gets carried away. That's a very important point. The third important form is uniform accounting standards. So as I was telling you, sorry. Yeah, this universal accounting, uniform accounting standards is something which needs to be practiced across the globe in the same way, in the same fashion, what we do it in 4 different countries. So uniformity in terms of, not in terms of just following the same formats or something like that. It's not the uniformity what we are talking about. Like, just like showing current assets, what are the current assets, what are the non-current assets, or what are all the operating incomes which comes, or talking about the standards and substandard assets which needs to be reported and all those things. We are not talking just by the broad headings where the reporting comes into. What we are addressing here, or what we are talking about uniformity, is uniformity in the measurement. Okay, uniformity in recognizing. So that's a very important thing. So we need to ensure that we follow a continuous uniformity in the measurement of the transactions. How do you measure it? How do you value it? That is very important. So that type of uniformity needs to exist, not just only in showing in the reports that, okay, we have followed the headings, whatever the headings are coming, what are the current assets, okay, we have shown all the current assets. But how do you arrive at that figures? Okay, whether you have followed the uniformity principles across the globe in order to recognize what is the short term, what is the long term. So whether you are following the procedures, whether it is universally accepted, whatever the definitions you are given, because sometimes we show it on working capital cycle. For example, if you want to show the transaction in terms of number of days, so normally the receivables and all those things, right? They show it in terms of working capital cycle. So how do you define that cycle? So is it something, the principles of defining that working capital cycle is something which is universally accepted from where you are taken, or have you defined your own working capital cycles under your own traditional practices or something like that? So this becomes a very contradictory thing, because I'm a layman, I'm sitting in some foreign countries. I presume that, okay, this is what working capital cycle is. Looking at the general holistic approach, this is what the definition of working capital cycle. So I think you are adopted that. But later on, I discovered that whatever the working capital cycle you people are calling is something which is not actually what it used to be. This type of issues are there. Many companies have faced this type of issue. So I personally have come across such type of encounters when I go and make the presentation with a lot of my clients. especially when they want to come as an investors to X company, right? So they will be questioning on many of the things on whatever the financial reporting you are placing to them. So it can be historical reporting, or it can be even the projections which you have done for the next 5 years or 6 years down the line. So it becomes very important for us to convince them, okay, this is what the standard says, and this is what the we have borrowed from the standards, how we are measuring, how we are using the formula in arriving at that figure. So this is how we need to convince them. Or else, if you are having your own way of defining without following the uniformity principles of accounting standards, then somewhere we are not ensuring that trust which those people are trying to develop with us. So I think we are breaching the trust there. So it's a very important thing that when you say IFRS, we need to go for uniform accounting standards. So that uniformity is something which needs to be globally accepted. So that's the uniformity they're talking about. And it improves communication and interaction with investor and analysts, because when all of us are following the same principles, what has been laid down under the global standards, right? That means our communication becomes very easy. So there is no need to give clarity, or there is no need to give disclosure norms, or there is no need to give extra notes to that particular point, or no need to give every time when they send some reports, right? No need to give assumptions or whatever the formulas we are using and all those things are not required. Those things are not required, because whatever the standards, IFRS standards are saying how it should be measured, how it should be valued, we are following the same principles in our presentation also. So to that extent, communications will be very easy with the financial data or the information what we are sharing with those clients. And also the analysts can make use of data in their own way of interpretation or extrapolation or extrapolation of their things from the current level to the next level. So because most of the projections will be based in order to take the decision. I think you know about present value, how it is very important in decision making, right? So present value will be based upon your extrapolation of the data, whatever you are given for the previous 5 years or 3 years, whatever it is. So it becomes very easy for the analyst to conceptualize under how you are valued as per the IFRS guidelines, and that he can take it and he can blow up the figures for the next 5 months or 5 years or years, 6 years, 7 years, whatever they may be. So he can extrapolate that information and he can come up with the analysis that makes the things easy for you, whatever you want to say, that can be communicated to that person. So that's a very important thing what happens. Then the process of conversion of IFRS generally results in harmonization of internal and external reporting, which can assist entities in reducing the cost. This is very important, and ensuring consistency in financial reporting within the organization as well as the external stakeholders. So I think most of you agree with me if I say that the cost is the primary thing which needs to be addressed today, because the price is something which is already prevailing in the market. So only thing, if you want to be competitive in the market, you need to be very cost conscious. You need to be very cost competitive. That's very apt word what they use in business today. So how competitive are you in terms of cost? How good are you in managing your cost or controlling your cost or bringing down your cost? So this matters, because in this competitive world, which is purely a monopolistic competition which is happening, there are a large number of people who are coming and going out in the business. There are a lot of competitors who are doing free competition with you. So how do you excel? How do you sustain in your business? How do you see that your business grows over a period of time? So the only way to do it is through cost competitiveness. So this IFRS also helps in cost competitiveness, basically by bringing a sea change in your internal and external reporting. So this is a very important point which many of us doesn't know that, because if we don't practice a proper standard and try to measure, for example, inventory is one measure which directly hits your cost. So if you are not following the proper measure to value your inventories and recording that inventories in your books of account, and if you have followed a wrong measures, then your inventory goes for a task of hitting your all the other financial statements, and that may lead to inflating your cost. So that's the end of the day. We are not in the competitive race if the cost goes up, because the price needs to go up, or else we need to sacrifice our margin. So sacrificing margin and running the business is very dangerous. So if you want to be competitive, you need to see that your cost is under your control, or you do some cost reduction. So that can be ensured only if you have a proper standard mechanism in place where you value your transactions as per that standards. So that's a very important thing which needs to be done. Corporate should come to know its true worth, fair valuation of many balance sheet items. So today we have something called as valuations. Valuation, business valuation is a very important concept which is applicable in all your mergers, acquisitions, or even in going for enhancement of your loans or expansion or whatever it is. So valuation is a key thing which needs to be done. Or even at the time of settlement also, in case of insolvency and all those things, valuation needs to be done. So when I want to value your business, how do I do it? So what are the fair valuation principles I can adopt? So you see, this is again linked with your IFRS only. So if your transactions are getting recorded with those things, and if the companies are able to know its true worth or its true fair value, then I think the valuation can be done. Because today more relevance will be on human capital valuation, or the intangible valuations, or how much of the green valuations your business stands for. So how do you do this? Because these are the frameworks under which your standards needs to be defined, and that needs to map with your international standards. So there is already a standards where the international bodies are given to all the countries. Only thing is we need to mirror our internal standards so that at least we are with par with what the IFRS standard says. So that's something which we need to do it. So that if I practice this IFRS, then I'm mirroring myself, I'm mirroring my accounts to the standard what the IFRS is looking at. So this is where the fair valuation of the company can be established. So that's a very important point. So valuation of business. Today, your net worth is not measured only on your book value items, whatever you are showing in the balance sheet. There is something called as intrinsic value of the business. Your DCF value is there, something which is very important, and free cash is there, FCR is there. See, these are the things which values your business and gives your valuation in a more apt way. So how do you arrive at these things when your convergence of standards are not meeting the international standards? So this is where this type of relevance and importance becomes worth mentioning at this point of time. So that's one thing. Convergence with IFRS enables I missed one point. Convergence of IFRS will increase the opportunity for Indian professionals abroad also. This was proved actually. So when UAE wanted to adopt the IFRS, right? So they wanted to adopt the IFRS for their purposes in their country. So they banked upon Indian professionals, because we had already quite long experience working for our Indies, and our accounting standard, as I told you, was almost close to the Indies or IFRS what it was there. So there was a lot of demand for Indian accounting standard professionals who got a lot of opportunities moving to a lot of Western countries, especially the GCC country, what we call as Gulf Cooperating Council countries, where people got opportunity to go and establish the IFRS system there. So that's one of the opportunities which is there for this professional if you are convergent with international standards, because there are a lot of countries which still needs a lot of professional support who can help them, because all these years they were following their own way of recording the transaction and measuring the transactions. But suddenly the global trade or cross-border trade has created an opportunity for all the countries across the globe where they need to now move towards the new standards or new way of reporting. So that has become very difficult for these people to adopt, and that's how now these people also started banking upon countries like India which has a very good potential professionals who have worked or not having knowledge with working on these IFRS platforms, and now they have been hired by such companies to bring their own standards. And there are also some people who are working for the governments of that particular bodies or their own professional bodies which are there. They are supporting their professional body to come out with the new standards or guidelines for the companies which are incorporated there. So it has created a lot of opportunity. That is one thing which we can say, that even a lot of even the Chartered Accountant Institute has also come out with certification course in IFRS and all those things. Similarly, a lot of professional bodies have come out with a lot of courses. All the professional bodies have started doing these courses because seeing the importance and relevance of this in the job market, also these courses are being designed. So certification courses are there. So that's one of the thing which we can tell when it comes to the question of India. Then conversion with IFRS enables Indian companies to access global capital markets and enable cross-border listing and encourage more foreign capital flow to the country. So this foreign listing is one big thing which needs a lot of formal ways or a lot of regulatory norms to be fulfilled and all those things. So if you are convergence with IFRS, or if your internal standards are convergent, hello, anything? Hello, hello, hello.
Yes, sir.
There was some noise which interrupted me. Is there any question or something which should be taken?
Oh, yes. If any of you have got any questions, kindly you can post it on the chat box or you can ask, sir.
Because questions, it was told that questions will be taken at the last, right? I'll give 5 minutes,
Yes.
last 5 minutes, we can take the questions at the last.
Yes, sir. If at all anyone have got any questions, you can ask, sir.
Yeah. Okay. Yeah, I was talking about this capital markets, because see, today, if you want to go and list your company outside the Indian capital markets, it's very difficult because there are a lot of listing norms which needs to be adhered, and if you want to list in 5, 6 different countries, then you need to follow their own norms which has been laid out in those 5, 6 different countries. So it becomes a costly affair for a company. So instead of that, if you are compliant, if you are convergent with the IFRS, and that can move the things to sail in a easy way, because once investors tries to understand and try to read your balance sheet and financial statements, they get attracted to your company and they can directly pour the money into your own capital markets back in your domestic country. So no need for you to go for listing in foreign countries to raise funds for your business. So this is one thing which is very important in today's again competitive world, because everyone wants foreign investment to come in the form of dollars, and everyone wants to have a sufficient dollar reserves for their country, and also for companies to get good investors from the foreign countries. So when we talk from the broader perspective, this IFRS, if you are following the convergence standards of IFRS in back home in your country, right, then it will create an environment wherein the foreign investors will try to pump in more money into your company, not requiring you to go and list your company there and follow all the procedures and all those things. To that extent, you are saved with a lot of investment cost or a lot of expenses relating to your listing and all those things. So that's a very important point which we need to keep in mind when we talk about the convergence of your IFRS in the local standards. So it saves a lot of your listing cost, because investors become more familiar with your company because you have already practicing the IFRS standards in your reporting structure. So then the subsidiaries of companies operating in jurisdiction where IFRS is the accepted standard need to follow the same accounting standards as their corporate parent. So this is one thing which they are told, and this is really an interesting thing, because normally what used to happen earlier, before these convergence standards were not there, the practice was not there, The subsidiaries used to write their books or record the transaction in the domestic countries wherever they were practicing, wherever their establishment was. Suppose an Indian company is having a branch in, let us say, in somewhere in Europe. So they used to follow the own Europe IFRS system, but Indian system was purely based on the accounting standards what we used to follow here. So the subsidiaries, when they wanted to merge their consolidated financial statement and report at the corporate level, then it used to be very difficult for the person who wants to again do the rework on all the local IFRS, whatever they have entered into and convert it into Indian standard. And there used to be a lot of discrepancies here. So a lot of errors used to happen, and we don't know whether that was that the whatever was reported was true and fair. There may be chances, right? Because no one used to view it. We used to go by the prudence norm and we used to trust the company, and we used to see that whatever the company used to report, we used to believe that. But how far whatever they report is true and fair, even the regulatories also cannot get into too much of it, even the auditors also cannot get into too much of that, because at that point of time that was the rule which was prevailing. So subsidiaries used to have their own IFRS in which country they were located, they used to report their structure, and the Indian company used to do the same transaction as per the Indian accounting standard, whatever was in practice here. So whenever they want to do the consolidation, their problems started. So these type of things are now not existing, because now subsidies and also the local countries, right, they follow the same principles, because IFRS is a global principle which needs to be adhered by all the companies, whether you are listed in India, whether you're operating, your branches are there outside India, whether you're a subsidiary or a parent, whatever it is. So you need to follow the same principles today. So that's one of the biggest advantages of IFRS today, which has linked your entire global accounting concepts. And the process of conversion of IFRS generally results in harmonization of internal and external reporting, which can assist entities in reducing costs. I think I talked about this. I think this slide is done already. The process of conversion of IFRS generally results, again, why it's not changing. Yeah, the key divergence between Indian GAAP and IFRS have arisen due to the four important things. One is the concept difference, that is how you used to visualize the transactions, what you are recording. That is a basic concepts. So I think universally, even though we we adopted to that concept, but as I told you, the concept as such remains same, but intricacies what were there in the concepts has undergone for a change. So whether we are competent enough to change that to the international arena, that's the challenge what we have. So that is the point which I was mentioning in the earlier stage, that even though the concepts what I study and you people are studying look same, but the concepts what we studied is something totally different from what the concept today the world is doing. So definitely there is a paradigm shift in the accounting concepts. So that needs to be bought in the IFRS. So that is where the key divergence happens from GAAP and IFRS. So how you visualize your concept, that itself has changed. So that has changed because of the changing world, because we are integrating your internal standards to the global standards today. Because globe is the platform today, not the country as a platform. So earlier we had a country, states and city as a platform. But today country, even if you talk about village will now converge with the international things. So a village can become an export hub or an import hub. Okay, so village can be a supply chain hub also tomorrow. So we don't. So that's how the business are moving. So the maps are only the physical things which we are telling that this is X country, this is Y country. When it comes to the cross-border trade, entire world is a map for us. So that is where the transactions are taking place. So even though there are some geographical specific things what has been told, but when it comes to the adaptability point, right, it is the global concept which is trying to be implemented across the world today. So we are now diversifying ourselves. So in this process, the concept has also gone for a change. So the way we used to look at stock and how we used to measure stock when we were doing the balance sheet, when during our college days, it's totally different. How do you visualize your stock and how do you report stock in today's concept? So the business itself has gone for a conceptual change in a lot of terminologies and the practices what they are adopting today. Then legal and regulatory requirements, almost all legal and regulatory requirements, even though whatever the country you are representing from, you are trying to mirror with the international side. So today, even though we have our own way of defining things, but we cannot go and set rules for international changes now. So whatever the international policies, procedures, agreements, treaties, whatever is there, right? You need to align back your acts, regulations accordingly. So similarly in customs, we came up with a foreign trade policy. So even though we promote export as one of our objectives, right? But we cannot just keep that in mind and start promoting our exports only at the cost of not importing from other countries. So you need to give, because we are all signed the WTO agreement, we are all part of member nations of WTO. So the trade should benefit mutually between both the countries or any countries with which India does. So your Customs Act, even though it gives specific provisions for export promotion, but not at the expense of not importing from any other countries. You cannot totally bar it from importing. So whenever you are fixing the standards, right, you need to accommodate the valuation principles in your exchange rate or the way you recognize the transactions on FOB or CIF value or whatever. So you need to give consideration for not compromising on the interest of India, but at the same time fulfilling whatever the global standards are there. So you cannot say that you cannot be exploited. At the same time, you should not show that you cannot dominate the entire world. So it's maintaining something like a balance between both of the things and ensuring that the peaceful environment prevails between the transaction between the two countries. So that is the legal and regulatory requirement. So we have seen a lot of acts getting amended in the recent years. So whatever the acts we studied and whatever the acts you people are seeing, it's totally different. So it may be MRTP Act replaced by CCI, or it can be the Indirect Taxes Act replaced by GST, or it can be any custom related laws which has been replaced over the old Act of 1982 and all those things. So you can see a lot of changes taking place, and that legal and regulatory requirement are just getting aligned with the international standards, whatever is there. And the present economic condition also matters. That's a very important thing. Geopolitical changes also impacts your convergence. That is your key divergence with gap and IFRS reportings. And level of preparedness, that's one of the biggest challenge which is there. And most of the companies are now almost on the verge of getting adopted towards the new IFRS. India went long back. So US was a country which took a lot of time, and still it is finding it some difficulties in some areas to adopt these IFRS standards. So yes, there are local gaps which are there, which still that mindset has not changed for many of the people, but yeah, you can't do anything. It's a competitive global world where we need to go and get adopted to the changes which are taking place across the globe. So I stop here today. So if you have any questions, you can just ask me.
Do any of you have got any questions? Any other questions?
I think one hand has been raised. Saram Vishesh for your first grade college. Hello.
So do you have any questions?
Madam, one question, I think one person has raised his hand. I think you need to unmute him, or else he can unmute.
Yeah, he can unmute himself, sir.
Okay, fine. Then please unmute and you can ask the question, sir.
So I think it's by mistake, sir.
Okay. Some Saram Visheshwaraya first grade college. Someone has.
Yes, yes, sir. I think it's by mistake, sir.
Okay. So anything in the chat box? Any questions are there in the chat box?
Let me check, sir. No, sir. Yes. No, no questions, sir, on the chat box. If anyone has
So
got any questions,
yeah.
you can kindly ask. Yes, I would like to tell about the feedback form. Like I said, the feedback form is not sent at the end of today's session. It will be sent at the end of the third day after the session. So all of you got to fill that form in order to get your certificate. So that's one
Okay.
change that I have to make.
So if you
And
have any questions, you can come back to me tomorrow also. That's not that you need to ask today only. Okay. So you can write down your questions on the basic concept what I covered today. If you have any doubts or if you want to ask anything, you can come back tomorrow also and day after tomorrow also. You can ask any questions what you want relating to the IFRS.
sure, sir.
Yeah.
Sir, thank you so much for being today. So tomorrow, let's start the session over the same time around 3 o'clock. I request
Okay.
all the participants to join us at 3 tomorrow. So thank you, sir. Thank you for all the participants for being part of this webinar. Thank you,
Okay,
sir.
thank you, madam. Thank you. So tomorrow I will be dealing with some of the standards. Okay, I will be talking about some of the standards with examples.
Thank you, sir. Sure, sir.
Okay, thank you, madam. Thank you.
Thank you, sir.